In a world where the quest for quick wealth blurs the lines of morality and legality, the story of emerging global holdings emerges as a cautionary tale. A tale that intertwines the allure of high returns with the seductive power of trust, especially when it comes from those who wear the cloak of religiosity. This story unravels the intricate web of one of the largest Ponzi schemes in over a decade, where billions of naira vanished into thin air, leaving behind a trail of broken dreams and financial ruin in Lagos, Nigeria. At the heart of this financial debacle are Bamiche Samson Ajetumobi, an ex-banker allegedly turned Ponzi maestro, and his partner and wife Elizabeth, both of whom masterminded emerging global holdings. They portray themselves as the benevolent providers of high-yield investments, promising returns that would make traditional banking products blush. But behind the facade of microlending and investment advisory was a deep, dark secret. Emerging global holdings claim to offer a financial lifeline, a microlender to the needy, and an investment haven for those thirsting for lucrative returns. From humble beginnings of pulling funds for small loans, their empire swelled to command over 20 billion naira from unsuspecting high-yield seeking investors on a tall claim to provide investment banking, advisory services, micro-lending, and brokerage services in Nigeria and Africa. They promised the moon, telling investors in the funds the money was invested in a boutique of investments ranging from real estate, bonds, forex, equities, etc. However, it appears the company may have been perpetuating a large-scale Ponzi scheme. The cracks began to show in August 2021, when returns ceased, sparking panic amongst investors. This was uncharted territory for a scheme that had never missed a payment, even in the direst of times, such as the global COVID-19 pandemic. In a country where returns on investments are largely lean single digits annually, Emerging Global seemed like the star boy of financial institutions, doling out as much as 10% monthly. What followed were frantic meetings, assurances of normalization, and a series of failed promises that would eventually lead to a dramatic escape by Ajetumobi, leaving investors grappling with the harsh reality of their misplaced trust. Still believing the funds were invested genuinely, investors suggested that he cut rates from 10% to about 3%, a logical sacrifice if it meant that they at least get their capital back. Ajetumobi cut the interest rate to 7%, promising to make things right by October 1st, 2021. He would vanish into thin air after escaping a police raid on his luxury apartment the next day, organized by an investor who feared for his 1 billion naira, approximately $3.3 million, after not receiving returns on it in 3 months. As the days flew by, investors who had their money indirectly invested through proxies started asking for their returns and their capital. It was not immediately obvious that they were victims of a large-scale Ponzi. After all, savvy investors like microfinance banks, investment houses, fintech companies, and even churches were rumored to have invested in the fund. This could just be a short-term problem, they thought. How it all began. As a banker, Ajetumobi began pulling resources from his family, friends, and colleagues to offer flexible and unsecured microloans between 10,000 to 100,000 naira, an estimated $20 to $300. To traders and market women trading on fast-moving consumer goods. As the venture gained momentum, he resigned from his banking job to dedicate his efforts full-time to his burgeoning enterprise. Ajetumobi's magnetic charm lay in his unwavering commitment to disburse monthly dividends to his investors, building trust and encouraging reinvestments. He operated a sophisticated network of investors, ranging from institutions that had billions in pooled funds invested to individuals with tens of millions invested directly into the fund. How could he have achieved this in such a short time of starting this business? He lured former colleagues from one of Nigeria's biggest banks, Zenith Bank, with huge paychecks they could not refuse, allowing him access a network of big-paying bank customers. With constant payouts, investors increased their stakes and introduced newer investors for more gains. Some investors chose to latch onto the opportunity themselves by pulling funds from other investors and offering a lesser yield or fee to act as intermediaries for Emerging Global. The 10% monthly payouts were too good to resist. Within a span of 5 years, the investor demographic expanded exponentially from a modest gathering of 30 to an astonishing 90,000 investors. In this period, the loan portfolio swelled from approximately 5 million to an outstanding 11 billion naira. These figures, unparalleled by any metric, did not stir skepticism among investors, who were buoyed by the consistent financial returns. but they stirred concerns from experts who argued that the business model had a potential default rate of 30% if loans are to be turned over between a 30 to 40-day period. Ajetomobi boasted of a default rate of only 5%. Imagine Global adeptly rebranded itself as an investment colossus with claims of being a registered microfinance bank, possessing offices in prestigious locales such as the UK, USA, and Canada. The aspirations of IMG align with the voracious appetites of its investors, aiming to dominate the money lending sphere not only in Africa but also in Eastern Europe within a decade. Such audacious goals further fueled investor enthusiasm, underscoring the importance of scalability as a pivotal narrative for any founder. The aftermath. Just as the experts opined, the aftermath was catastrophic. Investors ranging from individuals to institutions were left in financial disarray. The social media was awash with tales of deception, a sophisticated scam that not only emptied wallets but shattered lives. A WhatsApp group and a Nairaland trend became the epicenter of their collective despair as they sought to claw back any semblance of justice. On these platforms, the curses flowed from heartbroken investors to the Ajetomobis. The luxury life. How did they squander the fortune amassed from their elaborate ruse? As alleged by investors, they bought lavish homes in the best neighborhoods, both home and abroad. Exotic cars and evil citizenships in far-off lands painted the picture of a life of opulence funded by the hopes and savings of their victims. As the law finally catches up, the wheels of justice begin to turn, albeit slowly. With Ajetomobi finally apprehended by Interpol, the spotlight now shifts to the courtroom. Victims watch with bated breath, hoping for restitution, foreclosure, and for a message to be sent loud and clear that the pursuit of wealth, when built on the ruins of others, offers no true sanctuary. Current state of the case. A Lagos State High Court ruled against Imagine Global Holding Company Limited, Imagine Global Solutions Limited, Bamiche Samson Ajetomobi, and Elizabeth Anuoluwapo Ajetomobi, ordering them to pay nearly 19 billion naira to the victims of their alleged Ponzi scheme on a suit filed by 27 claimants who sued for themselves and 118 investors of Imagine Global Solutions Limited. As at March 2024, a lawyer of Ajetomobi informed the court that he had written a letter to the Office of the Attorney General of the Federation to seek for an out-of-court settlement of the matter. The story of Imagine Global Holdings is a stark reminder of the fine line between investment and speculation, between trust and gullibility. As we seek to navigate the treacherous waters of high-yield investments, let us remember the lessons etched in the losses of many, for in the end, it is not just about the return on investment, but the return of investments.